Palantir has been one of the best performing stocks in the market in 2024. The company is re-accelerating revenue growth and making inroads in a key strategic area, which I'll discuss in this video. There's been a few factors that's driving Palantir's stock price higher. I'll aim to discuss a few of them in this video here. So let's take a look at the details that are driving Palantir's performance this year. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So in its latest quarter, Palantir delivered excellent results, and it was driven foremost by strong execution in their U.S. commercial business and continued government business acceleration. Government business has long been Palantir's strong suit. Palantir's services are best in class. The trouble is in the price. The trouble has been in the price, and that's why it's gained good business with governments, because they have deep pockets and they can afford governments can the services Palantir offers, and they don't need to worry about not being able to afford it. Businesses, however, there's a relatively fewer businesses that can afford Palantir services. That's where I've said that Palantir could open a new opportunity if it can make its services more affordable or demonstrate to businesses that their services are worth paying, even though the price is extremely high. And that's what Palantir has done. They've found a way to show businesses their services are worth paying for. Now, the opportunity in artificial intelligence is massive and growing. The numbers keep getting revised higher as sales and profit numbers keep coming in quarter by quarter, month by month. Revisions on artificial intelligence keep moving higher and higher and higher still. And as noted by Sequoia, which is a notable investment firm, the revenue expectations from the AI ecosystem's infrastructure build-out have grown from $200 billion to $600 billion per year in just 9 months. So in the previous 9 months, those expectations have increased by $400 billion annually. That's a triple increase in where it was before. That's how quickly the AI market is moving, and mostly moving higher. That's why you've seen companies like Palantir, NVIDIA, Microsoft, and others gain significant valuations in their stock prices as a result of this growing enthusiasm in AI. There's tangible evidence for this build-out. There's money being spent. Tens of billions of dollars are being spent already, and it's growing to hundreds of billions of dollars. Customers, meanwhile, continue to engage with artificial intelligence, consumers through large language models like ChatGPT, and businesses through services like Palantir's to enable enterprise resource management more effectively. Palantir's focus is on deploying the enterprise AI and production system, solving meaningful problems for their customers. Every enterprise has problems they need solving. Sometimes they don't have the information necessary to solve the problem. Sometimes they have the information necessary. Check that. Sometimes they have the data necessary, but that data doesn't turn into information until you process it effectively. Many enterprises have data silos where they have data here and here and here and here, but the data doesn't communicate with each other effectively enough to provide information for the decision makers at the company. Palantir helps with that. Palantir helps to bring together all a company's data to provide information for decision makers to make more effective decisions. And so far, enterprises that have employed Palantir are very happy with the service, as evidenced by the company's growing net revenue retention rate, which means existing customers in their second year spend more with Palantir than in their first year. Because why else would they spend more unless they feel satisfied? If you spend money with a business, would you go back and spend more with that business unless you like the value you got? Probably not. If you go back and you spend more, that means you like the value you got and you want to spend more. And that's evidence of an excellent customer value proposition, which Palantir is demonstrating. In the last quarter, they signed 27 deals worth $10 million or more and closed nearly $1 billion of total contract value. So the demand for Palantir's services is growing and is growing at an accelerating rate. So the rate of growth is increasing. And that second derivative is extremely positive. Not very many companies are growing revenue at an accelerating rate or growing their backlog of orders at an accelerating rate. And the list of those companies is smaller still if you look at companies that are growing their revenue and back orders at an accelerating rate and that are generating profits on the bottom line and positive cash flow from operations. So Palantir is one of a select few companies that's demonstrating this level results. Now, their U.S. commercial revenue is their primary area of growth, the primary area of incremental growth they've discovered in recent quarters. And excluding strategic commercial contracts, this part of the business grew 70% year over year. The total business grew only 27% year over year, but this part of its business grew 70%. So you can see just how quickly Palantir is gaining traction in U.S. business. And that's very important for Palantir stock investors because the government business can only grow so much. There's a limited amount of governments, and there's a limited amount of governments that Palantir is friendly with. Remember, they only work with governments that are friendly with the U.S. So that's a capped opportunity. Whereas U.S. commercial business, that's a much larger opportunity, especially compared to where Palantir is currently. Now, it can also grow significantly with government business. I've highlighted in previous videos that the U.S. military spends a small fraction of its nearly $1 trillion in annual spending on software. The vast majority is on hardware, but they've been trending towards more software spending, and that's been working in Palantir's favor. And arguably, Palantir can continue to benefit as governments worldwide spend a greater percentage of their budgets, their military budgets especially, on software in favor instead of hardware. So their deal count in the U.S. commercial was nearly twice what it was just 1 year ago. Twice what it was just 1 year ago. And that's demonstration that they are making inroads in this category, where last year I was arguing that, their growth in this category is pretty pedestrian and not very exciting. And I was hoping they could find a way to accelerate this growth. And that's when Palantir was talking about AIP and the boot camps and the pilot programs and how that was aimed to grow this part of the business. And it worked, and it's working really well, and it's working better than I thought it would, and demonstrating to investors that Palantir does have this other opportunity that can really lead to this company growing to much larger than where it is now. And since the company is already profitable, and this new category is contributing to profits, Palantir has mentioned that they're growing responsibly because their goal is to continue delivering profitability on the bottom line. They're not getting too excited about this opportunity and saying, all right, forget about profits. Let's invest in growth in this category and let's go all in this category. Management isn't doing that, which I think is prudent, which I would like as an investor. I like that they're going after this opportunity and making such great progress while maintaining profitability on the bottom line. So all of that has been good for Palantir and Palantir stock, and it explains why the stock price has performed so well in 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.